What's up, everyone? It's Scotty with MoneyVest. So markets here basically flat on the day, not really going anywhere, with the Nasdaq here slightly down about 36 basis points, the S&P 500 down about 7 basis points, and the Dow Jones pushing up over 16 basis points on the day. And overall, the week was still green for the markets as well, with a lot of individual stocks somewhat mixed on the day, with, of course, Tesla slightly higher. Enphase was basically flat, I think slightly down. And of course, PayPal also struggling a little bit, as we have learned from the innovation day, and it's not been as fruitful. I will be doing a separate video on PayPal and of course Enphase stock as well. So those videos will be coming out very soon. As always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. There's 3 more spots left if you're interested in joining before the end of this month. So there is a 16% annual discount that's available until the end of this month. So again, you get access to all the members only private videos, 45 plus tutorials, including fundamental analysis, educational videos, technical analysis, and options trading as well as the intrinsic value, fair value spreadsheets, along with my watch list, and 20 plus Discord channels, including trade alerts and buy and sell alerts and options alerts as well. So again, links going to be down below for all of that. So first things first, let's talk a little bit about U.S. consumer spending, which did jump at the end of 2023. So back-to-back monthly gains, strongest start since start of the year. Inflation cools further as well. So we did have the PCE report come out on Friday, which I'm going to break down here in just a minute. So third weekly gain for the markets here for the S&P 500. The GDP numbers also came out. So if you take a look at the personal consumption expenditure, the PCE, that's really the Fed's preferred measure of inflation. We did see the PCE increase by 2.6% year over year, which was lower than the consensus, and also somewhat flat on a year over year basis. And core PCE, which is the Fed's preferred measure of inflation, significantly lower. So that is actually really, really good news, because we came in at 2.9%, which is not only lower than the prior number, but also better than what the consensus was, and month over month increase of 0.2%. And on a headline basis, we also saw month over month a 0.2% increase, which again was in line with consensus, and slight increase on a prior basis as well. But so overall, I think the inflation numbers were somewhat decent, more specifically core PCE that came in at a much stronger rate compared to what the consensus was. Now, GDP, which is, again, the gross domestic product, on an actual basis, increasing at 3.3% on an annual basis, much stronger than the consensus and the prior number of 4.9%. So some softening in the overall economic growth, which, again, kind of solidifies this idea that, okay, inflation's coming down, so is the economic growth. And that, again, leads to what? Price cuts. And we've got the Federal Reserve's meeting coming up in 4 days. So next week is when the FOMC meeting is going to take place. I will be doing a more specific, more dedicated video on the FOMC and their predictions as well for the markets and what that reaction might look like moving forward going into next week. So that is going to be coming out very soon. Now, in terms of markets expectations, 1, 2, 3, 4, 5, 6. 6 rate cuts is what the market's pricing in, based on the Fed funds futures, and we are expecting for the terminal rate to be sitting at around 3.75 to 4% towards the end of this year. So by December of 2024, that's where interest rates are expected to be from the Federal Reserve. That's the market's expectations. And of course, if there's any sort of discrepancy, if the Federal Reserve doesn't get down to those levels, that's where the disappointment comes in for the market as well, because the market's very optimistic, pricing in a lot of rate cuts in 2024. So the entire semiconductor sector and of course chip stocks took a little bit of a breather, as a lot of these stocks sold off. CLAC, we had Lam Research, Applied Materials, Qualcomm, Intel down almost 12%. So a lot of these companies selling off on the back of some earnings here. And again, valuations had been booming for a lot of these companies in this sector. So it's no doubt that we are seeing a little bit of a pullback. Apple here slightly down, Microsoft lower, Amazon slightly higher, Google and Meta also basically flat, with Tesla rebounding slightly back up. But really, it's just immaterial considering how much it's already sold off. This right here is the entire market. So again, small pockets within the market that were green. And over the last 1 day, of course, energy, defensive, healthcare, cyclicals all pushing higher, with real estate and technology selling off. And in the last 1 week, of course, we've got most sectors, including energy, comm services, financials, technology, materials, all of them pushing higher, with real estate and cyclicals selling off. in the last 1 month. Of course, we got comm services, technology, healthcare, financials, all pushing higher, with cyclicals, utilities, real estate, and materials pulling back and selling off on the day or in the last 1 month. And of course, we got heating oil, coffee prices, orange juice, platinum, palladium, all pushing higher, with sugar volatility, corn, soybeans. We got cotton, wheat, soybean, meat, all of them pulling back, and Bitcoin back over 41, almost 42,000, and Ether just under 2,300 as well. So if we go over to volatility, once again, not really moving all that much. So a little bit over 13 right now is the VIX, and it continues to be at a pretty low level, and 12.7, 11.2 is where we are for that range. That red rectangle is kind of like that riskier range where we need to be very, very cautious, and we need to be very aware and prepared and alert for when the markets, or if the markets do start to pull back. Now, I've mentioned this before. I'm going to say this again. Just because the VIX is low does not mean an immediate signal to sell. Just like how these indicators that we look for, so this right here are some of the indexes that we track very closely, and you'll notice that a lot of them have been starting to roll over, right? So this is percentage of stocks trading above their 50-day moving average, percentage of S&P 500 stocks trading above their 50-day moving average, and it's been rolling over a little bit. This right here, percentage of S&P 500 stocks trading above their 20-day moving average. So we did see a bit of a pullback, then a little bit of a rebound, but we're still very much, on our trajectory, potentially lower if the market starts to really start to come down. So a 7 to 10% correction in the S&P is not unlikely, and something that I believe everyone should be aware of and everyone should be prepared for if there is one, right? Not saying that there is going to be one. I'm saying if there is one, I'm going to be ready to deploy some cash back into the market and start buying some stocks and some, putting some cash to work once again. So those two are not the same. When the VIX is high, in my opinion, it is most certainly the time to buy and start deploying cash. But when the VIX is low, it is not the time to start selling, but instead it is the time to start hedging, in my opinion, to maybe a little bit de-risking, considering how you want to rebalance your portfolio. But the idea is to be patient, let the prices come to you, and we want to look for really, really good deals in those discount windows that the market is going to give to us. Like the market is going to provide those opportunities to dollar cost average into. It's just a matter of time to be patient and to wait for the prices to come to us. And just like this, where the markets are going to start showing some signs of technical weakness, that's exactly what we are waiting for. And that's when we can start kind of pouncing on some of these deals. So again, if you want to get access to all the alerts, find out exactly what I'm buying, what I'm selling, what options I'm trading, link's going to be down below. There's 3 more spots left if you're interested in joining us. Now, this right here, Nasdaq percentage of stocks that are trading above their 200-day moving average, so a little bit over 61%. So still 2/3 of the market is trading back above their 200 SMA on the Nasdaq composite side. So still a third of the market in the Nasdaq still trading below its 200 SMA. That's a long-term moving average, which definitely does go to show that there's still some long-term weakness, technical weakness for a lot of these companies that we're watching. Now, with respect to crude oil, now this is a little bit of a problem. Now, the reason why this is a bit of a problem is because it kind of falls under the trifecta, the trouble trifecta, as we like to call them. The 3 things that we track very closely are crude oil prices, the dollar index, and the 10-year treasuries. And the 10-year treasury yield has already been moving higher. So if you take a look at US 10Y, it's already on the way up. It's now sitting at well over 4.1% again. It has rallied a little bit over 10.5%. Now you tag along crude oil prices, which have also moved up over 11% in the last several days. And then finally, the dollar index, which is DXY, which has also bounced off of its lows from 100.7. It's pushed up almost 3%. So when all these 3 things start to move higher, well, guess what? That's going to put a more and more of an impact, more pressure on the overall market, which is the S&P, the Nasdaq, and the Dow. It's not showing up right now, but eventually it will. And that's exactly what I want you guys to be prepared for, because the futures were obviously not that great. After hours, the markets were not that great on Friday, after a lot of companies reported earnings. And we've got crude oil prices, the 10-year treasuries, and the dollar index all pushing higher at the same time. That's a trouble trifecta that we have talked about. Now, going back over to the S&P 500. So this right here was the SPX, still trading at an all-time high at just under 4,900. Valuation's a little bit more on the premium side at over 21, 22 times earnings. Support level is going to stay put down to 4,800. So this right here is going to be that support all the way down to 4,690 to 4,700, all the way down to as low as 4,600. And of course, that 200 SMA is sitting at 4,400 as well, which again could be the likely potential support level to watch if we see the market starting to roll over at that 200 SMA. Of course, it's going to take some time and a lot of effort for the bears to push this down because of how much strong the momentum's been, how strong the sentiment's been for the entire market. But just to keep in mind, that is going to be some levels to keep in mind for S&P. Nasdaq here also down about 36 basis points, starting to show some signs of some of that weakness here. RSI is overbought, so is the MACD, and the price itself starting to come down slightly, slowly, and steadily. And resistance is going to stay put at 16,196, with support levels going to stay put at 15,190 to do as low as 14,400 to 14,600 for the Nasdaq as well. So those right there are going to be some things to keep in mind for the Nasdaq as well. Now going over to individual stocks here, Apple starting to roll over. I may cut my position here in Apple. I did make some nice profit, and it was only supposed to be a swing trade. So if it does end up in the 160s, I will be looking at a long-term position. But for now, since this was only a swing trade, I'm looking to lock in some profits here on Monday, and we'll see how that goes. Because obviously we traded off of that 200 SMA. We saw a nice 8% rally for Apple, and I'm going to be looking at potentially closing in that position to lock some profits in, and then of course rebuy back in at a lower price from a long-term perspective, closer to 160s. Talking about Amazon, I've got a couple of covered calls sitting at 160, so I was barely in the money for briefly on Friday. This right here is a very strong resistance. Those calls expire in 2 weeks, so if Amazon stays below 160, that's great. That's going to be a very good Goldilocks scenario. But of course, if it pushes past 160, I don't mind getting rid of some of Amazon, de-risking a little bit and taking some profits off the table at those prices as well. So that is going to be the analysis. And of course, resistance is going to stay put at 160, with the support level is going to stay put down to 155, down to as low as $143 for Amazon. Tesla, on the other hand, where do I even begin? It's just been on this consistent slide lower. We've talked about Tesla in more detail in another video, so definitely do check that out if you haven't already. But this right here was the entire analysis of that downtrend of lower highs and lower lows, and I specifically pointed out to the fact that it could come down to this lower low and that confluence of support, considering that previous support level here and support level over here as well. So this right here is the overall downtrending channel for Tesla. So again, lower highs and lower lows, and support level is going to stay put down to $180, and that's really where we are. If it ends up breaking down below, the next support is going to be down to $151 per share for Tesla. Nvidia, on the other hand, at an all-time high. The analysis is still unchanged. We don't have a lot to go over for Nvidia, AMD, because of their all-time high nature. Price discovery right now, very, very overbought. Valuation's expensive. So there's not really much to go over other than the fact that I'd be very careful here. I may even lock in AMD next week on Monday, considering the profits have been very, very lucrative, 60% up on this stock. So that is something that I may also consider, maybe selling some calls or straight up getting rid. Actually, I can't sell calls because I don't even have 100 shares anymore. So I may actually end up just selling my entire position just to get rid of some and kind of free up some cash. And at the same time, the valuation's way too high for AMD. If I'm not a buyer here, then I could consider kind of de-risking a little bit, considering how much it's rallied and how overbought, overextended the stock really is at the moment. Now, finally going over to PayPal, and PayPal here is still struggling. A huge red candle last couple of days, of course, bouncing back higher a little bit on the day today, 1.76% back up. Resistance going to be up to $64, $65, with the support level is going to stay put at $56, $57 per share for PayPal. And of course, we've just been consolidating sideways at those levels for quite some time. Visa, on the other hand, reported earnings and beat on EPS, beat on revenue. I've got a more specific, more dedicated video coming out on Visa very soon, but it did see a drop of over 1.7%. It is incredibly overbought, so I wouldn't be surprised if this selling pressure somewhat continues for us to see a little bit of weakness into Visa here, and support level is going to stay put down to this 250 to 245 level for Visa moving forward. So that is that previous resistance going to be that next support level to watch for Visa. Now, talking a little bit about Meta Platforms, and Meta here trading at an all-time high at just under $400. So again, market cap just over $1 trillion for Meta. So it's done really well. Very, very strong recovery. Support level is going to stay put down to 383 to as low as $352 per share for Meta Platforms, all the way down to this green rectangle, sitting roughly $315 to $330 per share for Meta as well. So those right there are going to be some levels to watch for Meta. And finally, going over to Netflix, continues to break outside of its previous highs, hitting a new 52-week high of just under $580. Incredibly overbought, so super, super careful here. Caution is something that we all need to employ, considering a lot of these individual stocks, Magnificent 7 and Core Tech, is trading at an all-time high with very, very overbought, overextended technicals at the moment. Huge gap here that's left to be filled in the low 500s, and that's exactly where the support level is going to be for Netflix. And talking about Google, and Google here, very, very strong move to the upside with a very, very overbought RSI and a MACD as well. Support level is going to stay put down to 150 to as low as $140 to $144 per share. So those right there are going to be a couple levels to watch as a support for Google. And then, of course, we got Microsoft, so MSFT, also trading at an all-time high. Support level is going to stay put down to 384, down to 366 for Microsoft. as well as that 200 SMAs and roughly $340 for Microsoft. So another really important support level to watch for Microsoft over here, as well as, again, 366 with as high as 384 for the company. Talking a little bit about Google, and Google here, of course, trading at an all-time high here. Support level is going to stay put down to $150. So again, we've got a very, very overbought RSI and MACD, and support level, like I said, it's going to stay put at 150 down to as low as 144 to $140 for Google as well. So yeah, just a lot of these companies very overbought, trading an all-time high, valuation's expensive, so there's not really much to go over other than the idea that, okay, just got to be careful here. If I own Google, if I own Microsoft, if I own a lot of these companies, I just got to ask myself what I plan on doing. Like, is it worth selling calls here, or can I just simply hold and not do anything? But of course, if it do end up dropping down, then there's going to be levels to watch, to buy, and start dollar cost averaging once again. But at these valuations, at these overextended levels, the risk reward is really not that favorable from a long perspective. And then finally, we come over to Enphase and Costco. So ENPH, again, consolidating sideways, down about 1.3%. So lots of consolidation. Resistance going to stay put at 113, 114. Support level at $90 to $93 per share. And then finally, Costco seeing a little bit of that momentum back up close to 1% here on the day, so just under $700 once again. Support level is going to stay put down to 643, and a little bit of that negative bearish divergence still playing a big role for Enphase as well. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like, and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course, getting access to all the members-only private videos. 3 more spots left if you're interested in joining. And again, that 16% discount expires at the end of this month. Discord alerts, trade alerts, buy and sell alerts, everything's going to be included. As always, happy investing. I'll see you all in the next video.